how much money can you actually make this bull run? Whether you're buying Bitcoin or you're going down to a couple $100 million like altcoin, AI coin, or you're somewhere in the middle, what can you expect? Are you going to get filthy rich? Are you just going to make a 20% return? Let's talk about that in today's video. If you don't mind, hit subscribe so you can see future videos just like this. If you do want to trade crypto, there's a link underneath the video to Blofin where you can sign up in just a few minutes and you can start trading. You can trade all different kinds of assets and you get some pretty sweet bonuses as well. When you use my link, you get access to this giant pool of prize money up to, it was $80,000, now it's $120,000. So the more you trade, the more you get. So definitely check that out underneath the video, and you can use leverage trading. We'll talk about that a little bit in the video, but look at Bitcoin. We're up at 95,000. We've taken a 15% drop. And to be clear, this isn't a video packed with news. This is just kind of my feeling and what I can see in the market, what's going to be coming here. Now, I have been long this market for a long time. I was adding from the last bull market through the entire bear market and stopped adding when we went to about 60,000, 65,000, somewhere around there, this first pump. Actually, it might have been through, it was through the Bitcoin halving. So I guess we had come down a couple times. People called me an idiot for buying or continuing to dollar cost average to this time. But, you know, in the bear market, you set up a plan. We kind of front ran the plan because of the Bitcoin ETFs, and we went up super fast. Then we had off the entire summer. Then we pumped up, obviously, on Trump's news. And now we're up. Basically, if you had bought any time besides like the last couple months, you would be in the green on Bitcoin. And a lot of people are starting to come into crypto, and this will be more the case even over the following months, over the next year. I think there'll be more people that come into crypto than ever before. So the question is, like, how much can you make? I think there is a harsh reality that typically when the most people come into crypto, that's typically not the best time to be that dollar cost averaging or buying in crypto. Like, that's usually exit liquidity. The most people come in towards the top. In your first cycle, you actually lose money. So be cautious of that, right? If you're newer to the market, be cautious because this is one of the riskier times to invest in terms of price, right? We're near the highs. But also, news has never been better. Like, crypto fundamentally has never been better. It's stronger right now, more decentralized. There's more support for it than ever before. If you weren't looking at the price and you've never looked at the price, you would look at all the news recently and you'd say it should be near the highest price that's ever been, if not at the highest price. And yeah, we are. So fundamentally, it's looking really good. We do have these 4-year cycles though, where usually we pump up over 4 years and then we fall down for a year and then we go up and then down. So the question is, like, how much can you make? Right now, if you're buying Bitcoin for the first time at $95,000, how much money can you make? And of course, this depends on your time span, right? If you're looking over 1 year, it can be risky. You might have to sit on your Bitcoin for a while because you might buy at the wrong time and then have to sit through a bear market. But, you know, I like to humor people. People have been wondering, you know, where could this market go? Well, some of the more bullish scenarios I've seen, 500,000 to $1 million this cycle. Now, is that crazy? It's a very good return. Like, that would seem crazy to everyone except for really strong believers in Bitcoin, but it is possible. I mean, I wouldn't say that it's my most likely scenario for the next year and a half, 2 years. But if countries really start buying Bitcoin, there's not a lot of Bitcoin to buy right now. And if they come out and start buying in mass, and at the same time, the economy still looks good, we have hedge funds buying, like, we don't know what kind of a price shock can happen and cause Bitcoin to have massive candles, like $30,000 in a day candles, if there's just not enough Bitcoin to go around and there are people buying billions and tens of billions of dollars of Bitcoin, and there's a race to get your hands on Bitcoin. So that can happen. Now, I'm not banking on that to happen because that pretty much means that you wouldn't want to sell until you see some of those prices are closer to some of those prices, and we're still off, 5 to 10x from there. So in that scenario, if you think we're going up to 500,000, you'd probably still dollar cost average out of the market, but you wouldn't be selling now, you wouldn't be selling at 200. Maybe you start scaling out at 250 or 300, but that's the most bullish scenario. A lot of other people are saying, maybe 200 or 300,000. That would be a pretty similar return to what we've seen in the past. We went from 3,000 to, let's call it 60,000 just to make the math easy. That's a 20x. This cycle, if we went 20x from the bottom of 15,000, just again rounding here, that'd be a $300,000 Bitcoin. Okay, that's a good return, right? That's still a 3x from here. Is that going to make you rich if you have $10,000 in Bitcoin right now? No, but a 3x is a 3x. No matter what you have in Bitcoin, the fact is a 3x return is really good. That would be that would take 12 to 15 years in traditional markets and the S&P 500. So that's still a really good return. That's an insane return. Some people, they're a little bit more cautious. They're saying 140, 150. So again, in that scenario, you're not getting filthy rich. You're getting a 50% return. But if you were able to dollar cost average, if you were buying during the bear market, there was a lot of time to buy around $15,000 to $20,000. I'm talking like 6+ months, maybe even longer. You can't even see it on this chart because it doesn't go back that far, but there was a solid time, and there's a lot of time in between 20 and 30,000. So yeah, these people that bought, let's just say at an average of 25,000, if we go up to 150, they're looking at a 6x. And a lot of people bought a lot of Bitcoin, like they added a significant amount to their portfolio. So I'm giving you a range, right? I'm not telling you exactly where we're going to go, but I'm giving you an idea. So top side, maybe you get a 10x, and that's like a very, I don't want to say unlikely scenario for the next year, but like that's probably next cycle or the cycle after. $1 million Bitcoin. Some people are saying super cycle, but again, just giving you a range of what could happen. So you've got to kind of base your approach on probably longer than just this cycle for your long-term bag. Like you probably start dollar cost averaging, buying over time, and then you're not so worried about whether you're buying at 95 or 100 or 90, like you're just dollar cost averaging for the long term, or you've already bought. If you're coming into the market now, you have to kind of set yourself up for a long-term plan if you're buying Bitcoin, because again, like this is a long-term game with Bitcoin. But some people want to go with altcoins. So what if you're buying something like Solana? Solana has raced up even faster than Bitcoin. At the bottom of the bear market, it was $8. Now it's 180, and people are pissed off because it's fallen 30% or something like that. So this has raced up really fast. However, it is one of the best. It's a very divisive very divisive crypto, because some people still hate it, but some people love it. It's where the majority of transactions are taking place in crypto. It's down 30% from its highs. I think this easily could go to $400, $500 in the scenario where Bitcoin hits about $200,000. That would be a 2.5 to 3x maybe when Bitcoin does a 2x. Could run harder than that as well, but I think that's probably a likely scenario. Now, if Bitcoin goes up to $500,000, I think it will depend. Solana will depend a little bit on how Bitcoin's getting there. Right? Is it just a bunch of countries that are buying Bitcoin? In which case, that's probably what happens, I guess. If Bitcoin's at $500,000 anytime soon, it will be interesting to see how that affects altcoins, because the countries aren't really buying Solana, right? They're buying Bitcoin. So there will be some people that take profits out of Bitcoin and roll them into other altcoins, but I think it'll be less than what we've seen in the past. So it'll be fascinating to watch. Maybe Bitcoin actually does as well as some of the top altcoins. Now, what if you want to go a little bit more degen? Like, well, not degen, but like a little bit further down the risk curve. You could do SUI. If you invested in SUI even just a couple months ago, you would be up 100% or 50%. SUI has done really well. It's still 1/6 the price of Solana. Let's say it gets up to $100 billion market cap. We would be looking at like a 6x, 7x from here. So maybe $30, $40 SUI. That would be really bullish, right? Because SUI's new, and that would put it in like the top 10. That'd be extremely bullish, and that would be the top 10 during a bull run, which is even harder to get into because all of these will go up 2, 3x, right? So yeah, you're still looking at like, again, 5, 6x, 7x. You're not turning $10,000 into $1 million or anything like that. You can always go further down the risk curve. One crypto that I've talked about several times that I'm invested into, full disclosure, TARS AI. I think AI coins will run really hard. So maybe this gets up to a $2-3 billion market cap. You're looking at, like a 10-15x. Okay, 30 cents to $4. That's, again, if it goes up to that $2 or $3 billion mark, which would be extremely bullish. It would put it probably just outside the top 100 in a bull market. Okay, so you're going down the risk curve and you're still thinking, okay, I can get a 10x. That's awesome, but people talk about like 1,000x within crypto or a 500x. Like, where do you get those? Well, you get them one of two different ways. One, you go into a meme coin or a utility coin and get in really early and get in pretty hard. I know 500 or 1,000x is kind of is independent of how much you put into it, but if you put in $5 and you get a 500x, that's a fantastic return, but it's not really changing your life much. I mean, $2,500 maybe changes your life, but like we're talking about 500x, and if you're getting into meme coins, you're probably going to lose a lot of time and money. Or like a lot of the smaller cryptos, maybe you smash it on a utility coin. There's actually a crypto that I sold going into the bear market because I shedded all my altcoins, and throughout the bear market, it went even lower. It went down to a $1 million market cap, then raced up to like a $600 million market cap. It's fairly well known. I was in before anyone else I know. So that can't happen. Like I messed up on that one, but that's kind of the exception, right? That was incredibly lucky. They even changed around what they were doing since I sold it. They were in a different niche within crypto. The other thing you can do is leverage trade. This is something that I use. Realistically, am I going to make a 50x or 100x in leverage trading? Maybe, maybe not. I mean, it depends on how aggressive you get. Like, look at this. Bitcoin. I went 5x at $55,000. I would be up. What would that be in terms of a return if I was just buying spot? 70%, something like that. But since I'm up 5x, or since I used 5x, I'm up 360%. Let's say Bitcoin goes up to $200,000. Well, I would normally have a 4x or a 300% return, but I'm on 5x, so I'm actually going to get a 15x return. What I did there was, and this is what I did on a lot of my long positions, when we had a pullback in something, whether it's SUI, Solana, XRP, Render, AVAX, whatever it is, when we see a 20-30% pullback, I go low leverage long. So we see this pullback, we're at, let's say, a significant support, or we start to see the market rally. I go 3 to 5x, 6x maybe, if I'm getting a little bit more aggressive, and then I put in a long position, and then I ride it up. We chop around a little bit. I keep on riding the position up, and I keep these positions open for a very long time. Now, there are funding fees over time. Those change based on the market, but you can see like this has worked really well for me. I think this is less risky. It may be risky for different reasons, but less risky than buying like a very small meme coins because those naturally blow up a lot. But these, I know the assets I'm getting into. I understand the rules. There's always some risk in using a platform, right? Not your keys, not your crypto, but I'm spreading this across multiple exchanges. And yeah, this can do pretty well over time. The key is you don't get too greedy. The key is you I like to wait for a nice size dip. We see some kind of support. And look at this, like SUI. We just saw a 20% dip. Now, is this perfect? No, but we've seen like 6 different times where it bounced off this line or close to it. We saw a 20% drop real fast, and now it's racing back up. So like something like this, this is a good time to be buying, or this would have been a good time to long SUI. And you can do this. It's not super hard. You don't have to have 18 different indicators. Again, you wait for a 20-30% dip. This assumes that we're still in a bull market too. So if you do this at the end of a bull market, you're going to get wrecked, right? You can do the opposite though. You could short if we're going into a bear market. I don't like to short too much, but this is really good for a bull market, and I still think we're in a bull market. So something like this, how much could you make realistically? Well, if you long the right crypto at the right time, depending on how much leverage you use. Again, we talked about 15x for Bitcoin. Let's go into one of those more bullish scenarios. Let's say plan B is right and we go up to $500,000 Bitcoin. Okay, well, that's a 10x from where I started, and I'm on 5x leverage, so that would be a 50x. That's a pretty good return for us to lose money on this. If I do a 5x at 55,000, right? I would be liquidated around 44,000. Now it's moved up a little bit because of some different fees, right? As time goes on, I've had this open for a very long time. But when I put this position on, I don't even remember the date. It's here somewhere, but we had significant support around 48,000, 49,000. We had seen resistance around that point too. And I knew that if I got liquidated around 44,000 or so, I would just open another long position at 5x. And that means I would be liquidated, around 36,000, which is lower than after the ETFs got approved. So I felt pretty comfortable with it. Sometimes you have to do this a couple times. You can also get more aggressive. Like I could have gone and done what? I could have done 10x, something like that, without getting liquidated, depending on when you did it. You could have done a 20x, 30x, and then you get into stupid numbers. Right? You get into stupid numbers because if you went in 20x Bitcoin, it goes up 10x, you're looking at 200x. Right? And there are people that do this. There are people that go more aggressive. You have to be careful. You could also do this on altcoins. Like imagine you got Sui at $1 and it goes up to $30. That's a 30x, and then you're on 10x or something like that. That's a 300x. And you just have to have more money to play with. Like the key is to not get too greedy. So if you're longing a position, you don't put your whole portfolio into that position. You don't put all your trading money into that position. You realize that could get liquidated. It won't affect you mentally. You'll just open a new position. This is maybe 1% or a couple percent of your portfolio and that kind of thing. Also, you could do something like the stack method I've talked about before, but imagine, I'm up 350%, and I've done this before. It's worked out well. Sometimes it's getting more aggressive, so it can go against you. I'm up 350%. I have this amount of margin. If I close this position and open it up, instead of $3,600 worth of margin, I'd have something like $20,000 of margin. And I start at a higher liquidation point. So it's just rolling the position. And then if we continue to move up, I have $20,000 as margin. And I could get liquidated a lot easier, but I also start with a lot more. So you start stacking these X's on each other. So that gets pretty stupid as well. Like that's where you get into the people that get 50 X's, 1,000 X's throughout the bull run. But that adds extra risk. It's definitely possible, but adds extra risk. What I like to do, low leverage long at significant positions or significant areas of support, and just ride it out. And then if a position also looks really good, sometimes I'll get more aggressive. So I might place I might do a 10, 20, 30x with a smaller portion than what I do with the low leverage long. And I'll be more aggressive to take that profit. So I might take that profit after a few hours or a few days for up. I've had insane returns from that, even like literally a 10x, 15x before. A handful of those opened all at the same time. You can get stupid returns if you just bounce off a certain area of support, ride out the low leverage, close the high leverage riskier bets, take those as your profit to roll into future positions or take out of leverage trading. That's kind of how I approach it. But this isn't right for everyone. This is risky, right? You have to know what you're doing. You have to understand it. Like this is not something to just jump into. Just like crypto in general. You don't start buying assets without understanding it. You don't start trading before you understand it, because then you'll make stupid decisions. You'll capitulate. You'll lose money to the people that know what they're doing. So that gives you a little bit of an idea for how much you can make. The key is to learn a lot, to start understanding how these market cycles work, to not get greedy, to focus on risk and return, not just some arbitrary number. I'm not going to just try to hit some arbitrary net worth number or some goal in my portfolio without taking profits along the way, because when you get greedy, that's when you get wiped out. So everything in moderation. My portfolio doesn't look like your portfolio. My risk isn't your risk. My income isn't your income. And we're all in different positions with different strengths and weaknesses. So you have to make a plan for yourself, but just want to lay out some realistic expectations. I realize some of those scenarios were extremely bullish. Like I do not think we're hitting $1 million this year, but there are people that are saying that. So that's the most bullish end of the risk curve. On the other side, I talked about some people think that we're going to hit 130, and that's the top of the market. So that's maybe a little bit bearish. You just have to position yourself in the right way and think, like, if you're new to this market, you're not getting rich this cycle, most likely. There's some standouts, but you're not getting rich. You're learning a lot, hopefully making a little bit, making wise decisions, then getting rich in the bear market. That could always be wrong, right? If we get a super cycle, the government starts buying, like maybe you get up to a quarter Bitcoin, and Michael Saylor's right, we're going to hit $13 million Bitcoin in 15, 20 years. That quarter Bitcoin is going to be worth millions. Right now it's worth 25,000, 20,000. So maybe you do get rich, but even there, I mean, we're talking about millions of dollars 20 years from now. So yeah, maybe you get rich, but most likely most people that try to get too aggressive and get rich when they don't have an income or savings or a knowledge base to get rich, they get wiped out. Right? That's just how it works. And everyone feels like that's fine. I'm okay with it. I'm going to take the risk. But then you're just gambling, right? And it's much better to make a 2x return than risk everything for 100x return where maybe there's a 0.1% chance that you get that. Like, the key is to make wise decisions over time that stack. Let me know your thoughts underneath the video. Of course, these are my opinions. Do your own research. Thank you so much. I appreciate it. I'll see you all in the next one. I hope you all have a great weekend. Bye.